there's been a lot of debate about the efficacy of the SIP, that is the Systematic Investment Plan. And in fact, the Securities and Exchange Board of India and the mutual fund industry are quite enthused or excited by the idea of the Choti SIP. It's a great way to start up. But the question is that enough? Is that enough to create durable wealth over the long term? And the answer is probably no. You have to increment it. You have to step it up. So right now on this chat, I want to talk about the benefits of stepping up your SIP. Joining me is Dilshad Bilimoria, who is Managing Director and Chief Financial Planner of Dilza Consultants Private Limited. Dilshad, thanks so much for taking the time. First of all, a lot of people start SIPs early on and keep them going. Maybe they add additional SIPs in different schemes. What is the benefit, in your opinion, of a step-up SIP?
Right. So as we say, step-up SIP is basically increasing the amount year on year, right? So for example, if you start with a small SIP, like you mentioned, of say 10,000, and then you say that as my income growth increases, I'm also planning to increment the SIP amount every year. So that's actually going to add to the compounding effect and ensure that your corpus would grow much faster and reach the targeted amount much faster.
You know, I said Choti SIP, and that's certainly not 10,000 rupees, Dilshad. I think a lot of my viewers would think that 10,000 is quite a lot of money to put aside. But having said that, let's ask you this. Should you do it manually or should you do it in a step-up manner? Because when you select your SIP or a new SIP, you can actually choose to do a step-up SIP as well and say 5% or 10% or whatever you're comfortable with.
Yeah. So there are options by fund houses which provide for an automated SIP increase on a year-to-year basis. You just need to tick off the right columns. But what we do is we also evaluate where the current standing of the client is and to understand whether a step-up SIP of say 10% or 15% or 5%, depending on the current cash flow position and the kind of job employability of the person as well. So you could, of course, update the SIP incremental percentage, but we keep it open to try and be flexible to the client.
You know, that's a great point, because early on in your career, your income is not going to rise by 10% in all probability, right? You might have a higher percentage, and so you might find that you were operating at 20,000 or 30,000 rupees in 1 month, and then you've gotten a bump of 20%. You don't need that entire 20%, so you can possibly save a little more than you did in the previous month. So it's a good idea. So essentially, the better idea might be to do it manually. But I want you to illustrate, Dilshad, if you can, what are the advantages of this step-up SIP? And perhaps we can talk about one of the more popular schemes, something like a Parag Parik.
Sure, absolutely. So what I've done is I've done an illustration on Parag Parik, which is a very well-known and widely invested fund today. And the typical returns on this fund over the last 1 year, 3 years, 5 years, 7 year, and 10 year. And I've assumed that somebody invests 10,000 per month for the first year. As a normal scenario, vis-a-vis stepping up that SIP, say by 15% every year. So I have done this calculation, and here goes the numbers. So if somebody were to invest, say, 1,20,000 per year in the normal SIP, over a period of 5 years, the effective corpus growth would be about 20.85 lakhs. But if the person incrementally increases this by 15% year on year, so the first year is 10,000, the next year is 11,500 per month, the following year is 13,225 per month, the following year is 15,209, and the fifth year is 17,490, and which could easily happen if, people are in their early 30s or so. In this case, the accumulated corpus that the person is able to view is about 26,58,000. So this is a whooping 6.58 lakhs more, Alex, and that is where the magic of compounding really works in their favor.
And this is just a 10-year period that we've looked at. I say just, but actually the beauty of compounding kickstarts after the 10th, 12th, 15th, 20th year, when you've got
Absolutely.
a sizable corpus under your belt, and you're doing a lot of the heavy lifting early on, and I think that's where the central message of this is. But let's also talk about it in a longer time frame, Dilshad, and why this step up is actually very important. You had also sent me a graphic about the Nifty 50 over the course of a pretty long period and going all the way back to 2000. What is the illustration telling you about utilization of the step up SIP?
Yeah, absolutely. So, this graph talks about the 33 years of market performance, right, from 91 to 2024. And what I've tried to point out is when the downturns in the markets are happening. For example, in 2008, when the world financial crisis happened, or in 2020, when COVID happened, if you see in those years, the markets had fallen quite heavily. Now, the idea, the benefit in those times, and of course, presuming you know where you're investing and the underlying securities are kind of well-founded and solid, investment options, the best thing to do is to kind of increase your SIP amount in those periods, right? So if, for example, in 2008, somebody had, got all the bad news, and we also had the bad news for about a year, but starting 2009 February, the markets really stepped up again. If somebody kept waiting and assuming that, oh, the whole, world is falling and things look so bearish, I think that's when, all our famous economists say is when you should actually be looking at investing in the markets. And that is where you should be adding more in terms of your SIP top-up amount, as well as your incremental lump sums as well.
That is an important question. So let me ask you this. So point is well made, but Dilshad, should you do lump sums whenever you see a substantial drawdown, or should you stick to the tried and tested SIP route?
Yeah, that's a great question, Alex. Unfortunately, I don't have an answer. The point being, we really don't know when the how long the drawdown is happening, and whether it's going to continue downwards or continue upwards. And like the graph, rightly shows. For example, in 2008, it had fallen quite a bit. Now, many investors would have thought, okay, let it fall some more, and then I probably would invest, right? And we are not kind of soothsayers to say that, okay, this is the bottom and you should be kind of investing your maximum and go all out at this level. However, what we follow as a strategy is that if we had a planned, say, investment from liquid to equity, every downturn that's happening, we are trying to add a certain percentage depending on the macro and micro fundamentals of the economy, right? So as we know, in 2020, everything was down 20% in one day in April. And that was actually the most great period for us to suggest this kind of lump sum investment to our clients. And we did. And post that, even in 2021, although COVID had its second and third kind of phase out, clients did make a lot of money. It's
absolutely
difficult to kind of time the market. But yes, you can do a combination of lump sum and SIP. Yeah.
Okay, so that's the bottom line. The bottom line, of course, is to increment your savings. Dilshad, thanks so much for taking the time, and pleasure speaking with you.
Thank you so much.